Who wants to buy a bank stock? And if you want to buy a bank stock, who wants to buy Citigroup? We'll take a look. If you want to look at a mixed metaphor in the stock market, have a look at Citigroup, one of the biggest banks on earth, on every street corner in about 160 countries around the world. Yet in the stock market, a disaster. It's been a disaster since the collapse in 2007, 2008. You can see it looks like a ski slope more than it looks like a profitable company. Why is it? Coming into the crash 2008, Citigroup, Citibank is its big franchise, was in every country, was probably in every market, and lost pretty much everything it had in terms of capital. The stock went from, well, it's been re-rated, but went from about 500 now down to about 40, 30. In old terms, it went from 58 to about 2, 1.5. Now the question is the bleeding over? Is the bad news over? Is this something you could put in your portfolio? It could well be. Why? Well, it's dirt cheap. You may say it's overvalued because what do you know what's in its portfolio even now? But Citigroup, Citibank, this is the franchise, successful company. The market cap's about $128 billion, and they have more of that in Tier 1 Basel, Tier 1, Tier 2 capital. So a very well-capitalized bank. Does it make any money? That's the question. Does retail banking around the world, does investment banking, wealth management make money? It costs a lot of money to make that money, and it's been the problem at Citibank is that the market just, quote, doesn't believe it. They just think, yeah, tell me something else. What's the latest fear in the Citibank world? 60 billion in loans to energy companies. Energy, I needn't tell you, oil especially, is in the doldrums. Citibank has got to be looking nervously at that portfolio. And in a way, that speaks to the issue of Citigroup as a company. It's probably beyond the ability of any one management team to manage. You're in countries all over the world. You're in markets all over the world. And every once in a while, there's some market in the world that's going through the torrents, and you're going to lose money. Now, let's look at the positive side, because I think there is a positive side to Citigroup. Stock's at $42 a share. It's one of its buildings. Stock's at $42 a share. In terms of book value, it's about 0.6 times book value. Very cheap. Almost, so you're 60 cents, you're paying 60 cents, and I hope you're getting $1 back, if not more than $1 back. Second is rates move up around the world. They have to at some point. They maybe don't have to move up this quarter or this year even. Citibank will earn more on its significant float, depositors' float, in terms of cash. That's been a kind of a drag on earnings. So if energy markets don't collapse to zero, if interest rates come back a little bit, you're going to see the chance for Citibank to do two things. Even if it just stays where it is, it's earning a lot of money, $5.40 a share, trades at 11, 12 times earnings, not 5, 6 times earnings. It's a $70 stock. And it could be, I think the management's is well positioned to make it a $60 to $70 stock. Not tomorrow, but one of these days. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.